I expect you had a good time yesterday. You're not too hungover. Today we talk about the most interesting topic of last year, which was custody, which was proper account segregation. We all saw what happened with FTX. We all got afraid when Binance was under the gun. And with that, we all know that there are only three certainties in life. It's death, we have to pay the taxes, and there's going to be another crypto hack. So that's why we have to keep our affairs in order. And with that, I would like to introduce our panelists. And first off, Natacha, you introduce yourself.
Hello everyone, Natacha Desert. I'm working for BNP Paribas Security Services as a blockchain program manager.
Yeah, good morning everyone. Gernot from Raiffeisen Bank International. Raiffeisen Bank International is a universal bank with headquarters in Vienna, Austria-based, but we serve customers in 14 markets in CE, so Central Eastern Europe. I'm there in the group strategy department, and I'm basically the blockchain hub lead, so trying to combine everything, starting from cryptocurrencies implementation into the bank, but overall also the entire blockchain technology setup.
Nadia Filali, I'm Head of Innovation and Business Development at Caisse des Dépôts. Caisse des Dépôts is a public development bank in France and a public group. And we are working on blockchain since 2015 with a team working on that even on technological points or on innovation point. And we are involved as a CASP on custody for our public clients, and we work also on DID and on tokenization of assets.
Good morning, everyone. So my name is Victor Busson. I'm the Chief Marketing Officer of Taurus. So Taurus is a digital asset infrastructure provider. We provide custody, tokenization, and even nodes infrastructure, including indexing. We work mostly with banks.
Well, that's great. I mean, at the end of the day, you may be wondering why the hell are these TradFi guys talking to me about crypto again? Obviously, we have Victor, that's the exception. But at the end of the day, how did you transition from TradFi into crypto? Like, what made you move into this new and nascent asset class?
So as far as I'm concerned, I've been working for BNP Paribas for 18 years now. I started in operational teams, settlement, custody, corporate actions. So facing a lot of pain points. And then I joined the project management department, working both on market initiatives like T2S implementation, European Corporate Action Standards, tax standards, and also working on, let's say, internal transformational projects, trying to identify pain points and solving pain points. And I liked these last ones very much, working with operational teams, with clients to search how processes could be streamlined, how client experience could be improved. So when we started hearing about this new blockchain technology, which was supposed to revolutionize everything, and when a dedicated team has been created at BNP Paribas to explore this new technology and assess how it could impact the financial sector, I've been willing to join the team and to be part of the exploration.
Brilliant.
Yeah, as you can see, I'm not a digital native, so I have a background of 20 years plus in banking business, in particularly project finance and leasing business, and then somewhere in between, so after 10 years I started to deal with digitization in banking. That brought me then in 2018 to our strategy department in RBI, and a unique skill set for an Austrian, so being able to speak German brought me back actually into the blockchain space, because we were back then invited to a self-sovereign identity project in Vienna. And my colleague who was running the blockchain agenda back then was not a native German speaker, and so I jumped in, and this was my first touch point. So didn't have any clue at that point of time about Bitcoin and blockchain, but started doing from self-sovereign identity to dig deeper into blockchain. And at the end of 2019, I told to my boss, either I quit or I will only focus on blockchain topics, because I truly believe that the blockchain has a transformative power. Yeah? I think you don't have to like Bitcoin to love blockchain technology. And this is also the things what keeps me busy now in the last 3 to 4 years. So telling to our board that there is a view on the technology and a view on the asset class, and that that the asset class gives you a lot of opportunities beyond the discussions what you see in media. So all this fraud, AML topics, also the ESG discussions. I made weeks of time in my work life. I was just discussing these topics, but there are opportunities in there. And steadily, our risk managers, our compliance officers, our decision makers start to get an idea. And yeah, we are currently working on a product setup, on a crypto ETP, and we hope to be able to put it on our product shelf either end of this year or beginning of next year.
Me, I think I'm older than everyone here, but I began to work in IT solution for valuation of portfolio. After I was deputy head of back offices on finance and payments, and I work on different projects of transformation. And when I was head of business development for a new mandate for Caisse des Dépôts, one day a young guy, or 14 years old, said to his father and to me, "Do you know about Bitcoin? It's cool, you need to buy it." So we look at it, at him, and he said, "You are crazy, there is nothing here." And because I know that Matthew is a really innovative guy, I go back to office and I go to see someone who is working on financing the digital space, and I ask him if he know that, and he said yes, and I show him for me what is the scheme of the process to front to back office on securities, and I said to him, so it's very cool because we can cut making things there and doing things. And so I built the blockchain and crypto asset program in Caisse des Dépôts. And after I built the consortium named LabChain, where are involved different banks like BNP, Société Générale, Crédit Agricole, and others, but also startup, because what we want to do here is to build a do tank, but we were in 2015 to understand the things, and we began like this. And after we launched a company on settlement and issuance of securities on blockchain named Liquid Share that died this year, even with BNP and Euronext and others. And we built Archipel on DID and sovereign identity with La Poste, NG, EDF, and EN Group. But this company is live and is working already now. So we began like this, and I think that, and we don't only begin, we work on that for many years now. And I agree with you that we can be not excited by some crypto, we can be also agnostic. It's the case in my team. And we need to be open, because those technology, it's not only one. For me, it's what I name a social protocol, because all the things that are moving in our world and in the society are linked to the evolution that we see on technology, so it's important.
On my end, I will try to keep it short. So coming from Procter & Gamble, so I was marketing director, and actually I was even in China just before transitioning full-time. But the background story is basically I knew the co-founders since the creation of Taurus, so I was working at the same time of my full-time job. I was having very deep interest into the area, so very deep retail user of DeFi protocol, anything related to crypto. And basically joined Taurus full-time January 2021.
Great. And for me, I work in Julius Baer. I take care of the investment research, have the house view on digital assets. I also work with the strategy. I come from Venezuela, the land of arbitrage, so we've been using cryptos for a while to hedge our domestic currency exposure. And that's that. We cut now to the chase, to the juicy stuff. With you, Victor, you work in Taurus. You aim to provide the best-in-class crypto custody there is. So how do you see the future of crypto custody? What do you think of account abstraction in the future? What's going to happen in there?
So the future of custody on our end, so level 1 of custody is protection of private keys, if I keep it very simple. And then usually the level 2 is signing machines. So basically you will protect the private keys, but on top you have a layer to sign transactions. So basically you certify that you will be using the private key to actually sign the transactions. What's important for us is that actually now future-ready custody solutions need to go way beyond safekeeping of private keys. And actually what matters is that today in the traditional finance world, a custodian should perform asset servicing. And this vision can be done only if actually your custody solution can treat any process, any tokenized asset, independently from first the blockchain being used, is it a public or a private blockchain? And secondly, independently from the smart contract being used, because you don't know which standard will win. So is it a ERC20? Is it fungible, non-fungible? Is it ERC3643? Is it ERC1400 to tokenize securities? You have each time a lot of questions, and those custody solutions should be able to really process and to really follow what we call an open architecture, so that you're able to work with everyone. So our job as a technology provider is to abstract the complexity and making sure that the bank can focus actually on the use case to deliver real value. If I get into a bit more details, and then I will hand it over, usually to be ready, you need this vision of integrated custody and tokenization, because what matters is the asset lifecycle management or securities lifecycle management in the case of securities. So first, you need to cover the value chain, so custody plus tokenization. Second, you need actually to implement what you call to be asset agnostic, so smart contract agnostic. Thirdly, you need to implement what you call to be able to process it on a cross-border basis, because if you're a big entity, the regulatory framework will vary from one country to another. And when you do this securities management, you need to take into account. And fourth, you need to implement to what you call banking grade control. So all the functions of the smart contract, you need to implement governance rules behind it. And this is also with who initiates and who will approve a transaction. And also this is critical. Voilà. High level.
That's brilliant.
I can talk more after on account abstraction.
Oh, you can't. Your time is up. So with that, I mean, we've seen what happened this year. It's been all about the big institutions, the big TradFi players getting into crypto. We see very muted levels of network activity across multiple blockchains. We see low transaction counts. We see little numbers in active addresses. But since June, we saw BlackRock, Fidelity, and a bunch of the other of the world's largest asset managers started displaying interest, not only in ETFs, but also in tokenization efforts. And with that, I want to ask you, Gernot, do you think crypto has been a wake-up call for TradFi? I mean, how do you see the efforts of traditional banks evolving in terms of providing crypto services, custody? I mean, we're all here and we have something to share in crypto, even though we come from TradFi.
Mm-hmm. Yeah, I mean, generally speaking, our strategic belief since 3-4 years now is that cryptocurrencies in particular will change the customer perception on investment. So we see that there is, with cryptocurrencies, a new gold standard arising. So customers are expecting in the future 24/7 trading ability, real-time settlement and transactions, and also full transparency. Yes, we can discuss if all these features are equally important to all customers, and some are maybe the one or the other feature is maybe more relevant right now, and real-time settlement is maybe not so important for a private customer in this very moment. But this standard is here. Yeah? And we can mimic around in the traditional world of financing and pretend that we are also in real time, and settlement is happening then 5 days later in sometimes, but sooner or later the show is ending for us. Yeah? So I think there is a true point in that we have to transform. And the way how to transform, we see different strategies at the competition, also on our end when we're discussing it. So there is obviously a huge demand also on our customer side, in retail customers, to have an exposure towards crypto, so to be able to buy Bitcoin. Our role can be to be the safe custodian, clear. This is our reputation, to be a reliable and trusted partner of our customers. But we also have other customer groups like institutional investors, pension funds, who are also interested to get maybe some tiny exposure in this field, because they are able to tackle the risk, yeah? And they want to mix it into their overall portfolio. But they are regularly very strictly bounded to capital markets products. So that's where I see a field for tracker certificates, ETPs, and likewise. So you can go both directions as a bank. You can do the indirect offering, which is maybe scarce of a lot of Bitcoin enthusiasts. Yeah? But for some players, it's important to have the exposure, and they would like to rely on traditional rails.
So very briefly, is crypto the future of TradFi, or is TradFi the future of crypto?
Good question. We would need the crystal ball. I cannot tell you. What we also have to consider, crypto, in particular Bitcoin, everything at the moment looks like that Bitcoin is the sun in the heliocentric world of blockchain. Yeah? And if you are in banking, you know that there are a huge variety of asset classes, and where is enormous potential of volumes, where a lot of equity is stuck. So I would rather see that Bitcoin and cryptos is a good spark, but the fire will ignite when we talk about tokenization, which takes some time, but slowly but steadily, this ecosystem, this complex ecosystem of the financial world will start to grow into this.
Great. I mean, you talk about tokenization. We're all interested in tokenization. I go to our expert, Natacha. I mean, everyone is talking now about tokenizing shares, tokenizing funds, tokenizing private positions, tokenizing FX. Everything wants to be settled on chain. What are the advantages of this, or is it all BS?
So maybe, I guess you all know, but as a reminder, so tokenization is the process of issuing a digital representation of an asset on chain in the form of tokens, which we call security tokens when we talk about financial instruments like equities, bonds, or fund shares. Security tokens have the characteristic of financial instruments, and they qualify as financial instruments under MiFID, but they are also a new form of assets with new characteristics. And there are two main advantages, and there are two key differentiators. I would say so besides representing value, they can also encapsulate data. Various kinds of data can be the term sheet of the instrument, can be the calendar for the corporate events, ESG data also, for instance. And this is interesting because it brings a lot of visibility and transparency on the financial instrument for the investors and for all the players who have access to the blockchain network. And their second main characteristic is that they can also embed rules, and they are programmable thanks to smart contracts. Again, I guess you all know what a smart contract is, but so it's a rule that you can embed in the token, and which allows to automatically trigger specific actions when certain predefined conditions are met. So these rules can be processing rules to trigger corporate action payments, for instance. This can be compliance rules. If we talk about cash tokens and about central bank digital currencies, for instance, we can imagine that the central bank can also embed policy rules directly in the cash token. So as opposed to traditional financial instruments, which are passive instruments, security tokens, thanks to these smart contracts, are active assets and smart assets, we can say. And thanks to these programmability features, of course, you are also able to automate a lot of processes and thus reducing operational risk and bringing a lot of efficiency. And maybe one last thing. So if you combine the characteristics of the tokens with the characteristic of the underlying technology and the characteristics of this shared network, it's very interesting because you can solve a lot of pain points you face today, because you can move from this long chain of intermediary and this sequential process where the members of the value chains are dependent on another entity to trigger an action, to send an information, with all the issues we know today, the delays for the flows to go all the way down the chains and all the way up again, the risk of errors, the processing breaks, and the reconciliation issues. So with tokens and blockchain, you can move from this sequential process and also I don't know if you share the same vision, but a lot of the financial losses we have today as a custodian and as a financial intermediary are also linked to this sequential process, because sometimes you receive diverging information from two various sources, and you spend time to check which one is correct, or you receive an information too late and you cannot process a specific action on time. So with token and with the blockchain, you can move from this sequential process, to a process where each member of the value chain has the ability to have a direct access in real time to the golden source of information, without being dependent on another entity in the chain. So as a financial intermediary, you can go directly, proactively get the information you need, get the raw material you need to operate. And so this is quite powerful, because besides reducing operational risks and processing delays, it also makes each network participant much more autonomous and much more in control of his activity.
That's brilliant. I mean, you talked about delays. That's what we all hate. I mean, I guess new generations are all focused on spot, and spot is no longer T+3. Nobody's waiting 3 days for a wire transfer to come across, for my FX settlement to clear. I mean, and with that, we see the latency the blockchain offers in a couple of seconds. I'm sure it's going to provide a lot of answers to our questions. But with that, education becomes a big topic. How can we ensure, Nadia, that our clients are educated enough in order to partake in this blockchain journey with each one of our institutions?
The question could be inversed if you want also. It depends. The point of blockchain and crypto, when we began to work on that, we said that there is a question of education, and not only for the teams, because the team, when they are involved, they get to be educated because they like the point. But the fact is more, first of all, before educate the clients, I think you need to educate all the staff in the corporate and the institutional entities, because there is a lot of buzz effects on those subjects, and we know that it's always true today, because blockchain and crypto are against the climate, blockchain and crypto are dangerous and risky, and blah, blah, blah. And so, first of all, you need to explain what is it, what it is not. You need to explain that you will not change the world and change all the things in our current services with those technologies. Not true. And you need to explain, but Natacha began to do it, that there is some benefit to use those technology or those assets. And you will educate people only if they say they saw an interest and a benefit for them. I think it's the first point.
That's brilliant. I mean,
It's you begin by that. If you don't understand them by something that they need to work with, they will do nothing. And for our clients, because Caisse des Dépôts have some particular clients, because we have public clients like government, like notaries, like people who are working in the justice, in a legal space, and some people in territories also. And it depends. Some of the clients come to us because the world changed and they have themselves some clients who had crypto and they don't know what to do with that. And they don't know how to work with those clients. So what we do, and it's what we do, for example, when we launch our offer on custody with the first client that was the government, so it's not very easy. It's that you have front of you people that receive crypto, but they don't know how to do, they don't know what is it. And so we work with them for many months to explain to them how we will do. But also something, it's why I said that your question could be in the two. It's because the commercial part we said, so a client has something, you will work with them, it's okay. But if the client don't understand how it works concretely, where are the risks, where are the compliance that we need to put inside, because we have a regulator as a bank, and so we need to work in a certain manner. You need to explain to your client, educate your client that you cannot build your services like they want, but like it will work and like it will be compliant, because sometimes it's difficult. But
that's super. I mean, the game changed now. You have 90 seconds to answer your questions. I will be rude. I will interrupt you. I will go for Victor first. Security. I mean, two things. First off, what is the importance of account segregation? How does the future look like for banks with the high reserve requirements, especially when you have the current yields in the US treasuries, for example? Are you going T-bill and chill, or why should the banks keep their reserve requirements for cryptos? Go.
Thanks for the pressure. No, so on security, you have different levels. So I talked about signature mechanisms. You have access management controls. You have compliance requirements. So you need the KYT provider. You need to make sure that you comply also with travel rule. So it's also another discussion. You have what you call the risk management to cover the operational risk. Now, here, what we saw, and to your question, the issue is to avoid rehypothecation of fund, and also ensuring that from an accounting treatment, maybe if people are using, so you have two types of wallets, let's say that it could be omnibus or segregated. Omnibus, there will be a risk of comminglement, so basically, and the full point is to avoid having an actor using the fund and ending up actually generating a yield on this fund on customer fund, if I oversimplify. What we saw with FTX that everyone talks about, but it can cause those liquidity issues, and basically that's why segregated is so important. Now, another risk that we have is, I think that in July the SEC guidance gave, I think it was SAF 121, saying that there is implication between having assets on the balance sheet or off the balance sheet. What happened is that for the first time, basically crypto might be considered on the balance sheet, and simply because basically there will be higher risk of significant loss compared to other assets for custodians. And the implication of having the asset on the balance sheet will mean that you require actual capital requirements. Usually this ratio could vary like from 800%, 1,000 to 50%, and sometimes even more, and that's where basically the issue comes from. So that's why segregated is super important. You protect customer fund, but after you have those problematic of on-off balance sheet. I stop here.
Amazing, amazing. So, Gernot, investment implications. Did Bitcoin become the store of value? Did Bitcoin become the risk-off asset of the blockchain, of the cryptos? Why are we using Bitcoin as a store of value rather than as a payment mechanism or a decentralized peer-to-peer network as it was originally intended? What are the implications of the ETPs? What is all the investment relevance? Because obviously when you're buying an ETP, you're not buying the direct asset, but rather you are having BlackRock become one of the largest holders of Bitcoin if it ever materializes.
So now I have 90 seconds to answer a question
85.
which took you already 1.5 minutes to put. Okay, straightforward. As said, I think Bitcoin is a good starting point from a financial institution's perspective to get into the business. There are various ways to interact. As said before, tracker certificates, ETPs are good on the mid to long-term perspective. I see rather the wallet game coming in. So I think that those products will be not existing in 10 years from now. Why? Because I think with the deeper integration of crypto technology into the traditional financial world, we will also go more in this wallet interaction game. So that people, all kinds of customers, even institutional customers, pension funds, will have experience in using wallets, and this opens then new field of activities also for them.
That's great. Natacha, the topic we all hate, but we all have to learn to love, which is regulation. How do you see the future of regulation in the European Union? How does it affect your institution, and how do you plan to move forward with it?
So at the moment, so I have 90 seconds. At the moment, it's quite challenging because the current regulatory framework for digital assets is fragmented across Europe. European countries have implemented so far national rules to adapt for digital assets. So as a custodian, it's quite challenging because you need to navigate different and sometimes inconsistent national requirements for the same activity. And you spend time to understand the legal obligations, the roles and responsibilities in each jurisdiction. So it's definitely, I don't know if my counterparts here or in the room share the same experience, but in the projects we have conducted, it's definitely the legal and regulatory aspect, which is the most complex and time-intensive aspect, much more than the technological one. And regarding the future, so as you know, the EU DLT pilot regime has been implemented a few months ago. And for the first time, we will have a sandbox, but not at national level, but at a regional level, at a European level. So it will be the opportunity to experiment at a larger scale with a bigger ecosystem, and also a very positive step and a good step towards more harmonization and convergence across Europe.
That's amazing. So, Nadia, we've seen Barclays settling tokenized BlackRock assets on the Onyx blockchain by JP Morgan. We see the Citi Financial Services offering also settlement and cross-bank collaboration. How do you see the future of interbank collaboration on blockchain activities? Do you think it's important? Where do you think we're moving to?
I think that if you really work on blockchain, you cannot work without collaboration. Just first point, because blockchain is something that you use between different parties, and this party could be confident or not, is the first point. And we know that, for example, in France, one of the very first point of our collaboration between banks was something perhaps you know here, it's carte bancaire, but it's very old. And I think there is here an opportunity to work together. And I think the pilot regime is one of this opportunity to work together. And there is something really important between the banks. It's that obviously if we are working on the transaction, you will have a counterpart between front of you and all the counterpart at those banks already. So you need to build infrastructures that could be interoperable. There is a point of standardization here also to be compliant, and doing yourself and working on this area alone, I think it's not an issue, and it's why in the beginning we launched LabChain, we launched LiquidShare, and we're trying to work together in the bank space. I think it's very important, and perhaps there is one issue that could be different than before, is that because blockchain and DLT have no frontier, it will be more difficult because you need to do that at the international level and not only national level and not only European level.
Well, that's brilliant. So, and to conclude, I want to cut your time in half. You have 40 seconds now. It's less than half, actually. So how can this shift in paradigms determine who will be the fast movers and who will be the dinosaurs in TradFi? And give us one piece of advice, the only thing that matters that we take home today. Starting with you, Natacha.
40 seconds. So I would say that the dinosaur and fast mover depends on the angle, because we tend to think that traditional banks are dinosaurs, but if you take the angle of regulation, risk management, we could be fast movers. Because we have the trust of our clients. So, and the most critical piece of advice I would give in this evolving, changing context is to stay relevant. I don't think all the traditional incumbents will disappear and will be disintermediated, that the roles will be reshaped for sure. So, yeah, stay relevant, keep adding value for your clients and for the ecosystem. And as Nadia said, stay connected, create good partnerships, and especially keep all levels of your organization aware of what's going on and up to speed to be ready.
Perfect. Gernot?
Yeah, I think also a dinosaur can move fast, yeah? But speed is not so important from a banking perspective. Yeah? We should be a stable partner, we should be on the edge of technology, so we should learn and open ourselves. Also try to shape proactively the ecosystem, meaning also go to the regulator, try to find solutions to use MiCA. MiCA is an excellent regulation, but it's not perfect. It doesn't have to be perfect. I think it's safe enough to try now, to give it a try. And this is where we see our position. I think it's also a blockchain and crypto is a team event. So I like to have the exchange with Fintechs. They are the fast movers. We want to partner with them. We also want to speak, and we are speaking with other banking groups because I think it's a co-opetition setup in the future.
Nadia?
Yes, I agree that it's a story of competition, and I feel that it's a story of co-opetition. And so there is people who are going faster, okay, but those people are going faster in an environment that is not so clear for the moment. And I agree with Natacha that when you need to be compliant and it's expensive to be compliant, you don't have many value added, but it's expensive to do it. I think there is an advantage here for the more largest banks and institutional, but we need to work together with startup and fintech. It's what we are doing already in Caisse des Dépôts. And just for an example, we develop our self-custody solution, but we do it working with people who are in the space, and it's really important. And we need to be in a competition, in collaboration, and not the big against the small or the small against the big, because we don't care about that if you want to make this ecosystem with a good development.
So, Victor, you have 25 seconds.
I can make it now. So at least from what we saw and for having worked with many big banks, strategic alignment top to bottom, making sure you break silo between the different teams and even departments and functions, so between corporate banking, between private banking, usually security service. There is always things, and sometimes from the touch point of view, we have the same discussions with different teams. So there is like no centralized cooperation between, so breaking those silos and ensuring that you share best practice, and then cross-disciplinary effort between product, compliance, all the different departments. I think this is critical, and once it's like this, even the fact of having custody and tokenization, sometimes people work on similar projects, but they don't talk to each other. So making sure that everyone collaborates at internal level, and then on the co-opetition, at an external level, obviously, what we see with the rise of consortium again, tokenized deposits and all the RLN network, everything that's happening right now, you see this global cooperation so that things move forward and we have this standardization that will drive adoption.
Amazing. Thank you. Please give a round of applause to our panelists. And yeah.